Good evening, ladies and gentlemen. I'm Lamb Trades, and today I'll be taking you through my watch list for the week of February 12th, 2021. If you're new here, this is my weekly watch list video that I show what stocks are at the top of my list to watch out for this week. Hit the like, hit subscribe if you want more. If not, that's fine. It's your loss. The Discord link is in the description where you can see the plays that I'm making every single day and the updates on the plays that I cover here. But for now, let's get right into it. On the economic side of things, we got mortgage rates on Wednesday, which really shouldn't move the market, and initial jobless claims on Thursday. Other than that, I really can't see anything having that big of an effect on the market. It's another week filled with earnings, so here are the companies that I'll be watching out for. On Tuesday, we have Twitter and Lyft after hours. On Wednesday, we have GM and KO pre-market, and Zynga, Uber, and MGM after hours. And on Thursday, we have Disney. It's a quiet week for earnings. There are a ton of companies, but no real market movers. Now, let's go over SPY and what we saw this week. Honestly, I'm blown away. As we said last week, GameStop was most likely the reason why the markets were red due to a lot of institutions deleveraging their positions in the market. Futures opened up Sunday night, which is right here, and we can see they continue to fall until they were met by that 366 support. After that, all that it has been is green, and we did hit all-time highs on Friday. The reason for this is most likely due to the fact that the US government decided they are going forward with a $1.9 trillion stimulus package. We broke through any sort of resistance that we had this week, and I will be looking for a pullback to that 386 level to see if we can turn that resistance into support. If we can hold above that 386 level, I think this week will be very bullish for the markets. But for now, let's get into the plays we were watching last week. The first play we were watching out for was Rocket. I was looking for Rocket to hold above this $21 support, and after we did see it touch on Monday, it bounced off instantly and ran up to $22 a share. I'll be continuing to watch Rocket this week, and a break above this $22 level will be the most bullish for the stock. The next trade that we were watching was Best Buy. On Best Buy, we talked about this resistance trend line and how it was able to gap up and hopefully would show support again. Best Buy did bounce off of this resistance trend line, turn support, and it is now testing that 115 resistance. I would watch for a break above this level to see a possible continuation to $121 a share. And the final stock we were watching last week was DraftKings. This setup was beautiful and it really paid off. DraftKings pushed to that all-time high range this week after a bounce off that 53 level that we covered last week. I think this stock has room to grow, and if it can break through all-time highs, I think it can seriously begin to run. However, I think most of the run has to do with Super Bowl betting being this weekend, so I would not be surprised to see a pullback on Monday and Tuesday, but that will give us the perfect entry to get in before the pre-earnings run-up. I will keep you all up to date on DraftKings in my Discord, which is linked below. And if you guys are still watching, I would appreciate that you like and subscribe, as I do put a lot of work into these videos. But for now, let's get into the plays we're watching this week. The first play I'll be watching is Amazon. As we can see, Amazon reported an explosive earnings, and after it was able to break out of this pennant, it then was able to pull back and use this previous resistance as support, one of my favorite setups. This is very bullish, and I will be watching Amazon for a continuation upwards into the next coming weeks. The next play I'll be watching is GDX, which is a gold mining ETF. This is very unique and kind of random, but I'll try to explain so that it makes sense. As we can see, it's been held down by this resistance trend line and does have a pretty good support at the $30 level. If we look on gold, we can see gold has had this exact same trend line, and with the $1.9 trillion stimulus package passing, I think that we can see a big run up in commodities like gold and silver. So I would want to watch for these key levels, as if this breaks out, I really believe that it could run. So I will be watching for either a break of this resistance trend line or a bounce off of this support. I will enter on whichever one comes first, but this is one of those unique plays that could really pay off. So I will keep an eye on that for the next coming weeks. And the last play that I will be watching is NIO. This is my favorite play of the week, and I do have to shout out a member in the Discord named Jacob who actually called this setup forming a week ago. As we can see, NIO has been bouncing off of the support trend line for the past couple of months and has been held down by this resistance trend line for the past couple of weeks. I do want to see NIO break above this resistance trend line after this bounce right here on Friday. Monday will be a very key day as it'll tell whether we are headed up or down. If we can push above this resistance trend line, I do like the likelihood that NIO will continue upwards because of the fact that this resistance trend line has been holding us down. Another thing I like is how NIO has a support at that 56 level and has the 200-day SMA on the 4-hour time frame at 53. I will be watching for a break upwards on NIO, and I will enter depending on if we break above or below. Lastly, I would just like to let you all know that we have made all-time highs on most indexes last week, and the bounce does have way less volume than the sell-off. If we look at here, it's the S&P 500. We can see this is the sell-off volume and the bounce. On the Dow Jones, sell-off volume, bounce, and on the NASDAQ, sell-off and bounce. So I would be very careful, and I would keep an eye on things like the VIX or the UVXY, which is in the bottom right. These are two ways we can track volatility and uncertainty in the market. But that is all for today. I hope you guys enjoyed the video, and if you made it this far and found it helpful, don't forget to like and subscribe, and hit that bell button so you don't miss any of my content. I hope you all have a great week of trading, and don't forget to not risk more than you're willing to lose. These next few months will most likely be very volatile, so please be careful. Best of luck to you guys, and let me know if you have any questions in the comments, and I will see you all next week.